Good afternoon, everyone. Jason here. Today is December 20th, and this is your trade plan review. All right, as many of you know, we will be conducting a live trading session starting tomorrow at 9 a.m. Central Standard Time. The information that we'll be covering, we'll be talking about trade plan, price action, order flow, volume, etc. And we will be going into an in-depth discussion on what basically transpired here in the market today. So what you're looking at here is the CL trade plan for today. As a reminder, this trade plan is put out, is distributed through your OTG membership site about 12 hours prior to the market opening on a given day. So you have plenty of time to check out the trade plan, gather the information, and be prepared for any of the actionable trade ideas that are presented on the plan. Okay, so today we talked about the market being in choppy sideways conditions with the bullish lean. We give you this chart overview as one of the reasons why we feel like that this is going to be the case. And then we give you a couple of strategies based on that session bias. Today's strategy that played out here was, we said 53.26 to 53.16, and it's going to be in this zone that we were looking for a fade opportunity long. And we said the market needs to rally up to 53.50 or higher and then sell off for a fade long of 53.16. All right, so one of the things that we'll talk about this here in just a second. One of the things we're going to talk about in that training class tomorrow is price action and ideas on how to get into opportunities. Before I go any further here, one of the ideas that we talk about on the trade plan as well are retracement zones. Again, we talk about the setup here, and we said day high to day low, right, as potential shorting opportunities, right? We have a sweet spot that we look at, and then we have the standard fib levels that we look at. And this kind of idea right here gave you a real clue into what was about to happen on the trading day. So if you take a look at this 15-minute chart here, slide this down in front of you, okay? If you go back here to the high, let's see if we can change the properties on this, make these colors a little bit easier to read. We'll make this a nice... let's see. That's tough to read too, isn't it? Some of these aren't very easy to read. Let's see if we could find... Okay, this one might be a little bit easier. Okay. So if you take a look at this high measured back here on December 11th down to the low on the 15th, you'll notice here that the 61.8% range extension... Let's see if I can squeeze this in. All right, this is the 61.8% range extension right here. That is this green line. And the market rallies right up into that 53.77 area. Rallies right up into that zone. And that was going to have been a clue of what was next. So again, remember, we talked about on the trade plan that the market needed to rally up to 53.50 or higher, right? Oops, see if I can get this done right. Market needs to rally up to 53.50 or higher. That was 53.77 that you just saw. And that we would be looking for a fade long at the sweet spot at 53.16. All right, so as the market rallies up into that 53.77, you get a really very perfectly situated climax bar here on your 3-minute chart. Long wick, fat body. So there was an energetic push on your volume bars. You could see that was a bigger bar than most of the longs around it. It had a lot of volume coming into it, but the sellers took over, leaving this long residual wick here. And then almost immediately, about 10 minutes later, the sellers had one aggressive bar and then followed by another nice bar here, indicating continued weakness. And then, of course, you had this big, heavy bar all the way down into your 53.16 area. Now, this was the fade long area on your chart. That was the area that you would look to get long. And then you could see back up here on your volume chart, your heat map chart here, that the market rallied up into this 77 area, ran into all of this liquidity that was behind it. That was the that was your 61.8% fib retracement. Market rallies back into this zone where all of this liquidity is. You had this nice reversal bar here as well, right? And the market then sold off all the way down into 53. I think the low on this move down was 53.12 maybe, 53.13. But you could see all of the liquidity that was stacking up underneath it as the market came into this area. This was your fade area, and then the market rallied up here for 35 ticks right out of your zone. So a nice fade right out of that zone. You had an opportunity possibly to short this area up here, given all of the liquidity that you had, the nice reversal bar, and then of course the heavy volume riding it down into this area. So that was an opportunity for 61 ticks this direction. And then of course you had the rally up here into, actually that's 41 from 16. So that's about 25, 30 ticks right out of your trade plan zone. So we will be training in depth on these concepts tomorrow. You'll have access to the tools, the information, and the training to be able to effectively execute the strategies on your trade plan that is distributed to you each day, 12 hours prior to the market open. So we hope to see you in the training class tomorrow. And again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.